Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide. Here is Nathan Weaver.
Greetings and welcome to Kingdom's Wealth and Wisdom. I'm Nathan Weaver, founder and executive director of Petra Worldwide. For years, the world of digital assets, Bitcoin, Ether, NFTs, felt like the wild, wild west. It was a realm of hidden keys and shadow ledgers far beyond the reach of the IRS and their current tools at that time. But the frontier has certainly settled. In this current era, the guesswork is over. With the introduction of Form 1099-DA, the new fair value mandates from the accounting masters of your digital wallet, it's now placed in a glass box. Today, we discuss how to account for these intangible treasures, the end of the universal wallet loophole, and how to survive the IRS digital asset dragnet. The first major change is how businesses are required to report these assets on their balance sheets. For years, the rules force you to treat cryptocurrency like an intangible asset with an indefinite life. This was a lose lose situation. If the price went down, you had to record a loss or an impairment. But if the price went up, you weren't allowed to record a gain until you sold it. The new standard, as of 2026, you must now measure in scope crypto assets at their fair value each reporting period. This means your financial statements will finally reflect the true market value of the digital kingdom and currency. Changes in the value now flow directly into your net income. While this aids volatility and it certainly puts volatility in your P&L, it also provides much more accurate picture for lenders and investors of what your actual wealth is.
Pastors and financial leaders, do you need expert accounting or tax help? Do you have payroll or 1099 questions? Do you need a ministry expert to help you acquire real estate for your next project? If the answer is yes, yes, and yes, visit petraworldwide.org. Petra Worldwide has been strengthening ministries to transform humanity since 2007. Visit petraworldwide.org or call 855-481-9095.
So, on the tax side, the One Big Beautiful Bill and the Infrastructure Act have converged to create Form 1099-DA, digital asset proceeds from broker transactions. In 2026, centralized exchanges will send this form to both you and to the IRS. It's the end of the universal method. In the past, many investors treated all their Bitcoin across 10 different wallets as one big pool. No more. The IRS requires wallet level tracking. You must maintain the cost base of each asset within a specific wallet account. Now, there is a 1099-DA gap. Remember, these forms often show your cost basis, not what you actually paid for assets that have moved between wallets. So you have to be careful and make sure you're analyzing the form. If the form shows 50,000 in proceeds but basis unknown, the IRS may assume your cost basis is zero and tax you on a full $50,000 gain, and nobody wants that. If your crypto was used to purchase real estate, the real estate professional is now required to report the fair market value of these assets on Form 1099-DA starting in 2026. The IRS is watching every exit ramp for digital currency as the world shifts and we move back into a physical dollar from a digital dollar. So this is an ever-changing landscape that moves very quickly. At Petra Worldwide, we can certainly help you begin to understand what your tax obligations are in relation to digital currency. I'm Nathan Weaver. Lead with confidence, live with integrity, and build something that lasts today and the days to come.
Listen every day at 4 p.m. for Kingdom's Wealth and Wisdom, brought to you by Petra Worldwide, strengthening ministries to transform humanity. On the web at petraworldwide.org.